You could argue that, well, a little complacency never hurt anybody, but tell that to the Trojans. The problem right now in the stock market as I see it is that the VIX, which is a measure of how much traders are willing to pay to get rid of risk in the market. So this VIX goes up as people's willingness to pay more goes up, as the market is perceived as riskier, and it goes down when people perceive the market as less risky. Well, right now it's at a really, really low level. It's back to where it was before the 2007 global financial crisis. And VIX is a pretty good contrarian indicator that when risk is perceived as this low, it's usually a sign that the market is over complacent, that people are not very fearful. And one of the things that the cliche is that a rally or a market that's moving up climbs a wall of fear. And what happens is that as the market moves higher, people have been on the sidelines and because they were afraid of the market, come in. Well, when the VIX is really, really low, it indicates there aren't a whole lot of people out there who are afraid of this market waiting to come in. So the question is, as a rally progresses, what you'd really like to see is more money coming in as stocks go higher. With the VIX this low, you'd have to ask, well, who's going to come in? Where's the next group of money to drive this higher? We are, after all, at all-time historic highs on the S&P, so it's an important question. Right now it's August, and it's very hard to tell anything in August. Volumes dry up, especially in the last couple of weeks of August, as lots of people go away or stop paying attention. So it's not clear that you can draw conclusions from this. But to me right now, the market feels kind of listless, looking for direction, some profit taking. My real worry, however, is not August, but September, when everyone comes back and we suddenly get to focus on, well, the Fed and when it's going to taper, and of course the threat to shut down the U.S. government at the end of September. Those don't strike me as good things, and I would suspect that at that point the VIX will start to go up, which is usually not a good time for stocks in general, because that means money's coming out of the market as people start to feel that it's riskier. This is Jim Juback for themoneyshow.com Video Network.